Well, hello and welcome and hello, folks. It is Un Poco Mas, the only bilingual show on the internet where we give you just a little bit more news, analysis, and coverage of the financial events of the day, of the year, of the millennium, whatever time period we're talking about. We can talk about finances over the eons. We could talk about coins made of stone. We could talk about, hitting the guy over the head with a club if he doesn't give you the proper change, caveman days, whatever you guys want to talk about. But what I want to talk to you about is SoFi Technologies Incorporated. Ticker symbol is SOFI. As you know, guys, it is 10/12/2023. It's a Thursday. It's after market. It's 6:20 p.m. I have put in a very long day at work and I'm very tired, but I'm excited about the SoFi stock. The stock's down a little bit. A lot of people down, a lot of people give in. You guys, you're so emotional. Like the stock goes up and it's like, everything's great, management's great, analysts are great, the media is fair, there's no manipulation. Then the stock goes down a little bit. You're like, manipulation, man, it's not fair. Stock. Just buy when it goes low. And if you want to sell, sell when it goes high and stop whining. Stop whining and complaining. I know that's an odd thing to say from the original stock Karen, right here. Guys, I'm going to start warming up for all these shows with like a professional wrestling style warm up where you're just like, you know, also kind of talking funny. I have an ear infection that's very, very painful, so shouldn't slap yourself in the head. Should remember these types of things. But I get excited, guys. I get passionate. I have several passions, and one of them is bringing you guys quality programming when it comes to the SoFi stock. Now, what do we want to talk about, guys? There's a lot in the news. One of the things we've heard is Dan Dolev absolutely pounding the table. Touchdown, Danny Dolev, an absolute all-star SoFi bull from Mizuho. He came out again, reiterated his buy rating, put a $15 price target on the SoFi stock, representing, I believe, almost an 80% upside from current levels. He's saying basically the weakness in the price action has been due to investor concerns about constrained lending capacity. Guys, if you look at the numbers and you're realistic, you could talk all you want about the financial services loop. You could talk about Galileo and Technesis. You could talk about whatever you want. You could talk about the stadium. You could talk about golf. You could talk about your great grandma's birthday. It doesn't really matter. But the fact is, where they make money is on these personal loans. That's where the bulk of their balance sheet is. That's where the bulk of this EBITDA is coming from. And that's where basically their business has gone. They haven't had student loans in numbers, they haven't had home loans. Some of the other businesses are getting profitable, but they are smaller. The financial services business doing very well. The jury is still out on that, the Galileo side. Um, we're hearing about their expansion into Latin America, which I want to talk about in a little bit, is very very exciting. They're already in Mexico, and I think they were in Chile, but they got into Argentina and Brazil and a couple of other countries, and that's very exciting because you want to catch some of that new bank mojo. There's explosive growth in Latin America. They just have not had. Get that last drop of water. They just not have not had access to financial services that have been effective. They everyone there operates like off their mobile phone. Um, there's great opportunity for SoFi because they can roll out new features very quickly through Galileo. They seem to be able to follow that growth model. I think Latin America could become a critical piece of that growth and revenue puzzle for SoFi going forward. But I digress. Let's go on with this article. As of the second quarter, the company's total risk-based capital stood approximately 3.3 billion, which accounts for 15.8% of the roughly 20.7 billion risk-weighted assets. If the under the assumption SoFi doesn't take any additional steps to increase capacity, such as selling loans or raising equity, and continues to keep a buffer of 2.5% over the minimum total capital ratio, 10.5%, bringing the minimum requirement SoFi to 13%. Dolev calculates that this would translate into approximately 14.3 billion. Goes into the originations, and then it would be equivalent to around 6 quarters of lending, considering the 2.4 billion net loan growth from the second quarter of 2023 on a quarter over quarter basis. Additionally, by SoFi selling 10% of its second quarter 23 annual run rate originations versus 35 to 40% in 2022. Dolev sees an even longer lending runway of about 7 quarters. So they just have to sell 10% of the loans. In 2022, I guess they were selling 35%. Moreover, Dolev goes on to add, management is guided to positive GAAP net income. And basically what he says, for every 100 million in GAAP net income, it adds 750 to 800 million of incremental lending capacity. And that's the name of the game here, guys, is you know, lending more money at the end of the day, whether that's home loans, student loans, or you either sell the loans, you get fees, origination fees, or you just flat out hold the loans and make money on the interest, which is really, really high with personal loans, not nearly as attractive, obviously, with student loans or mortgages. But mortgages, you make a ton of money originating the mortgage. That's where it's at. And then you sell that on to some servicer who's going to package it as a credit default swap and, sell it to the guy from the office and then crash the whole economy. And then somebody's going to come in from Britain and go, I don't hear any music at all. Do you know why they pay me the big dollars, do you? It's like, oh, shut the fuck up. Like, stop with the accent. Like, we're all trying to, keep this company afloat. We don't need some condescending bullshit from some limey bastard who dropped in out of a helicopter on a fucking, you know, coming down, rappelling on a rope. He's like, let me hear from the young man who discovered this discrepancy. He's like, stand up and tell me in a clear voice, what is the nature of the problem? Okay, the nature of the problem is that SoFi is a SPAC. SoFi is disrespected as a meme stock. And SoFi has a ton of retail investors that are easily pushed around. But if SoFi can grow into Latin America and SoFi can continue to expand, one of the things, and guys, just a note, like the short interest has really spiked. It was down below 13%, popped right up above 13%, but the free float on loan, shares on loan went down a little bit. So I think some of the, some people that were pure long in the bull run came back to short long. Not exactly sure what's happening. Utilization is still quite high, but the short actually jumped way up just in the last 2 days. So not exactly sure what's going on there. I have to take a look inside the numbers. But there's an interesting article, guys, bearish article out on, let's see, Seeking Alpha. This guy, Michael Wiggins de Oliveira, he's pretty well written. He makes some good arguments, extremely bearish article. Guys, let me go grab some more water. I can barely, my mouth is just barely, I can barely get a thought out because of this dry mouth. It's horrendous. I can't work like this, guys. The conditions are absolutely deplorable. You guys stick with me, and I'm gonna get some water. I'll be right back. You turds. Hello again. That's better. I can feel my face again. I've been on the phone. I've been doing taxes for my biggest client, the big dog. Boy, oh boy, his taxes are a sight to behold. A lot of numbers and such. But anyway, guys, this guy is skeptical about SoFi technology. Basically, his issue, guys, I mentioned I had a ear infection. This is so painful, but my head hurts so bad. Oh my god. Oh my god, that hurts. All right. In any case, I should probably take some more Tylenol, but I forgot to bring any more with me. Anyway, on with this article. Maybe I'll forget about it. Reading from Michael Wiggins de Oliveira. So he's basically an energy guy. I don't know why he's writing about this, but investment thesis. Okay, battleground stock, ferocious arguments on both sides. Recognize some positives. Does not believe SoFi is undervalued. One stop fintech. He goes through versus the year. Of course, SoFi's up 38%. A lot of these other companies are down. Moneyline is the only company that's actually up more than SoFi. But everything else is down. Global Payments, GPN, is just kind of flat. But all these other companies, PayPal, Block, Shift, way down on the year. Obviously, PayPal has been the subject of much ballyhoo and discontent among some of the YouTube royalty when it comes to fintech. We've heard arguments on both sides. Are like, I mean, some people are literally like putting out an article or a YouTube video. It's buy PayPal, and then like 2 days later, they're putting out another video why PayPal's garbage because it starts to fall a little bit. So make up your mind, guys. Grow a pair. Have some consistency with what you're recommending and why, and actually understand the companies you're recommending. That's why I don't talk about a lot of companies and people are like, hey, can you talk about this company? I can give you my opinion. I mean, Palantir, I know a lot about Palantir. I've owned it. I still own a little bit. Um, there's other Tesla. I can tell you a hell of a lot about Tesla. I've owned that company for a long time. I know people who work there. I know Tesla probably better than 99% of the assholes on YouTube that, have these crazy inflated view of their insight into the future and think, Tesla's the only company that can do robotics or supercomputers or chips. And I love Tesla as an investor. I think their cars are amazing. I don't agree necessarily with like Elon Musk's politics in every way, shape, and form, but I don't think that's really what business is about. I don't think, I just don't believe in sort of this like censorship loop and, canceling and all this stuff. I'm like, if you're going to have a free exchange of ideas, you're not going to find everything pleasant. But, you know, it's like people have their good and their bad side. And it's like, okay, if you want to bring politics into everything, you can do that. But I'm just looking at it more as a company. Tesla's a great company. Um, it's not really I'm not really trying to give a personal assessment of the head of the company or whatever. I know he didn't even found the company, but that's neither here nor there, guys. Sorry, I'm getting a little bit sidetracked. I am very tired. It's been a really long week, and with this, you take the medicine and the ear infection, everything's foggy. Your brain's foggy, as you can tell. Anyway, past 6 months, this stock has sizzled. Stock's not, some of these others are actually profitable. Investors are concerned there's just too many competing products. And basically, what he does the rest of this article is he attacks the growth story. It's like, okay, Q1, 62%. This was the quarter on quarter growth rate, I believe. 57, or the quarter, year on year, on a quarterly basis, I guess you could say. 46, 37, and then for fiscal year 2023 is saying 32%. So, I mean, I understand the growth rate is slowing down as the company gets larger, the rule of large numbers, I think they call it, but still talking about, CAGR will be 30, close to 30%, for the next 5 years, at least, 27%. SoFi stock multiple not stretched but not cheap. 3.9 this year's sales, basically. So in the past several months, we've seen SoFi's multiples expand, not just expand, but double from 2x forward sales to 4x forwards. 4x not really forward sales; it's 4x, this year's sales, I guess. Um, we expand SoFi's multiples further in 2024, perhaps. However, recall SoFi now expected to grow in high 20s, 30% CAGR. So clearly it's slowing down. I mean, it's slowing down, but I mean, still, high 20s, 30% CAGR. I still think SoFi could actually be more like 35% if they're able to expand into Latin America, business banking. There's a couple of points I just want to make that, with regard to sort of the bearish growth story, basically says the bottom line. He just thinks that, it's promising in terms of the adoption curve, but he remains skeptical about valuation. Competitive landscape doesn't stand out from the crowd enough. Basically saying, the stock is not overvalued particularly, but it's a little bit stretched and it's not undervalued, and he's not a buyer of the stock. Fair enough. Okay. Guys, let me bring the Sharp Master into the equation, as I'm wont to do. I know I see what I want to see in the charts, but let me explain something to you. Let me explain something to you, Lucy. Um, Lucy, I'm home. Anyway, guys. So this pattern, I've gone over this. This is where we are right now. Um, why is this important? Hold on. Why am I in drawing mode? Why is this important? Um, it's this check right here, guys, circled in red. It's where this check circled in red. It's where this check circled in red. This is the reverse end pattern. This is the reverse end pattern. This is the reverse end pattern. These are about the same level. This is a lot higher. Don't worry about that. The algo brings the stock all the way down and it steps the stock back up because that's how it makes the most money. And it provides a lot of volatility in the price as it does so. But these three patterns, believe me, are very, very similar. And when you see the stock make this run, and this run before it gaps up, see it gap up right here above this red circle. I'll zoom in. See it gap up there. See it gap up there, and I believe it's about to gap up and run through, back through the, bust through the 50-day moving average and bust right through this channel and run up the next 2 weeks into earnings. Of course, much depends on the overall market, much depends on the macro. Inflation was sticky. It wasn't really bad, but it was a little bit higher than they were expecting. So that kicked us in the nuts, of course, today. But the overall market didn't get hit too hard. It recovered in the afternoon. There's still money coming into the markets. Not everyone, not the small time players, not everybody's going to just run to bonds, guys. Not everybody, not the stock traders, not the degenerates, not the gamblers, not the betters. Not the country club golf hustlers. Your Lester Diamonds are not going to bonds. They're still buying securities. They're still buyers of quality securities. 7 days a week and twice on Sunday, if you have 24/7 trading, which is only available at Toper Trade. Guys, so basically what I contend is going to happen is this run, um, is going to commence here and run up toward that red X. Yeah. If you see where this checks, it's just below this second part of the backwards N. You see the backwards N here, here, and here. You see it here, here, and here. And you see it here, here, and here. Okay? That backwards N, it's ubiquitous. It's SoFi. Nothing says SoFi like that reverse N double bottom reversal pattern. We call it the Danny Deals double bottom special, the old double hump. In any case, guys, my ear is popping and it just hurts like a motherfucker. So excuse me if I wince and cry like a little baby, little Gerber baby, little fat kid. Anyway, nothing cuter than a fat kid. Chubby Chizzy ages, things go sideways. But what can you do, guys? Such is life. Um, anyway, so what happens, guys? Where this stock checks from the initial run is below either end. The second end is always lower than the first, and it dips lower on that right hand side. So where this checks is lower there. Where this checks is lower than this. You just have to trust me. I know it's a little bit hard to see, but where this stock checks up before it gaps up is lower than the second end. Okay, this does not check until it surpasses this second end. I believe that's bullish. It checks back. Um, she's gonna blow, folks. There will be blood. I'm about my father's business. Like this thing, I'm telling you, it's going to move up. Look where this stock is going. Look what's about to happen. We're about to see gap net profit. The financial services productivity loop has not had a chance to work yet, folks. It hasn't even had a chance to work yet. There have not been optimal conditions. We haven't seen student loans. We haven't seen home loans. We haven't seen these things come online with financial services, with money, with these high savings and checking rates, with the banking sector. Um, Basically, savings from Galileo Technesis, we haven't even really started realizing that. People don't realize we're just getting things changed over. We just got notice not long ago that our credit cards have finally been changed over to SoFi Bank. So a lot of this stuff happened within the last months. Those savings will start to be realized in earnest next year. That's for damn sure. And in years to come, they're going to save a ton of money by owning that tech stack. So basically, high growth. It's high growth. These high interest rates are not going to be bad for SoFi. It's going to bring in more customers because they're going to offer a highly competitive interest rate, going to be able to still take market share from regional banks and mega banks that have legacy costs that SoFi doesn't have, allows SoFi to be more efficient and to give the customers more, help their customers get their money right. Basically, there's two ways to stop the market makers, these turd, troll, short, bear, up and down, short and long turds from manipulating the stock. One is for to break the cycle and stop panic selling. Like, for retail to stop being turds. And that's never going to happen. A turd by any other name still smells as bad. And you guys are going to be turds at the end of the day. You're going to panic sell here. You're going to panic sell here. Now, what happens? We need the second and real way it happens is the only way it happens is institutions have to come in. What has to happen? What do you need to kill a wolf? You need a freaking lion. Like, you need something bigger, something tougher. So, what needs to happen, like, to really, really punish the short turd bears out there, when they double pump this and this hits the second low, and some institution says, hey, I think the SoFi stock is worth 950, 10, 11 bucks. These turds just pushed it down from 950 to, 720. Let's buy 5 million shares if we're CalPERS, or let's buy, 5 million shares if we're Fidelity. Whatever the case may be, guys, some investor, some hedge fund, they just think that they like the future free cash flows. They like the stock. They like the SoFi stock, as do I, incidentally, guys. I don't know if I've disclosed that. Have I not disclosed that I'm bullish the SoFi stock, that I'm long the SoFi stock, that I'm zero hedge, that I'm all highway? Guys, full disclosure, I like the SoFi stock. Um, Breaking news. But anyway, guys, stocks going higher. I forget what I was talking about. Getting a little bit incoherent, as all my videos tend to do as they pass this arduous 20-minute mark. Max Pain has moved from $8.60 yesterday all the way down to $8 today. And that's because too many turds opened up too many short-term calls at $8.50. Basically, what I told you before was they're going to push it back down, and the 850 calls aren't going to pay. So they'll dump those. Retail turders, swing turders, we're trying to open those up for a couple-day trade. Open them up Wednesday when they look good. And then, of course, Thursday, today, you have the rug pull. And then puts, there was almost no puts at $8 yesterday. This number was like 1,000, I think, and now it's 3,000. So you're seeing a little bit more pressure to the downside. That's why I think Max Payne, like I said yesterday, I think it was 860, and today it's showing as $8 at the sites I look at. Anyway, didn't bother to try to calculate it myself because I'm not don't have enough book learning for all that. But guys, today, like I said, short went up. Live short interest today shows a small amount returned, but not really buying that. Cost to borrow max 14.39%. That's very high for the SoFi stock. And then over the last 7 days, free float on loan has gone from 12.4 to 13.4. So full 1% increase in the short. That represents about probably around 10 million shares. The shares on loan gone down to about 90 million, but still very, very significant. More short long, more covering to be had. Less shares available. Utilization is up. Cost to borrow max way up. Days to cover not really falling, hovering there, just under 3. Anything else really going on? That's pretty much it for the SoFi stock. Tomorrow, I don't expect these options at 850 to pay. The stock could close somewhere probably around $8.58 to $8.62. That's my prediction. Just depends what happens with the market. Futures are just a little bit green, but that can be kind of a false flag deal. Often, Fridays can sell off. Just Fridays aren't that predictable, guys. Let's be honest. I'm talking out of my ass. Guys, it's a SoFi stock. The ticker symbol is SOFI, coming in at $8.37 as we close out this fine Thursday evening. Hope you guys have a wonderful night coming into Friday and the weekend. My name's Danny Deals. The show is Un Poco Mas, where we give you just a little bit more. Thank you for watching, guys. It's SoFi. Ticker symbol is SOFI. Talk at you soon. Bye-bye.